What's going on, guys? Bexio back, and today we had a brand new video. This time on Plug Power. They had their earnings report, and it was a pretty good earnings report and a good, not of numbers coming out. Had mixed feelings in the beginning, but ultimately the stock price shot up after this earnings report for a lot of reasons. But if you are not subscribed, make sure to smash that sub button because we're on the road to 1,000 subscribers. But let's jump into this Plug Power earnings report. A lot of numbers coming out of this, and some things looking pretty good. So this is the next earnings data, but right here you see it was an estimated loss of 8 cents per share. They reported a loss of 19 cents, so they had higher loss, which isn't necessarily a great thing. But when you're looking at these numbers, we know they're burning cash and going through money to build out stuff and grow the company. So it's expected to see them losing money. Not even it's not even forecast or expected. They're going to make money anytime in the near term future. If they do, that would be ridiculous, but they're most likely not going to. You can even see the next earnings report, March 9th, is going to their forecast is a loss of 10 cents on EPS, and last year's was a loss of $1.12, which would be a big move in the right direction of not losing as much money. We'll see what they do with that. We know they're going to lose money. That's not something that's crazy. And this is a strong buy from analysts, 17 analysts, strong buy on Plug Power. That's how good their earnings report was. But if we're looking at these straight up numbers, this is just, you can just Google it and get like the simple overview. You see revenue is up 34% year over year. And I think this is the highest revenue number they have posted ever. So that's pretty insane. Net income. So these are things not to really look at too much because they don't mean that much right now, at least, because it's a growing company. We know they're losing money. Net income, you know that's going to be negative and they're going to be burning cash. They have been doing that. Net profit margin, again, we know they're losing money. Operating income, we know they're losing money. All of this stuff is just things like to be expected to see it being kind of negative. A net change in cash, they gained $263 million in cash, so that's a good thing. Down, but that, again, that doesn't really matter, not a metric to really care about. And then this one right here, cash on hand, is something I think is massively important to look at Plug and their ability to be this growth company that everybody wants them to be. So their cash on hand is $3.37 billion. And I think that's amazing because we're coming up into a period where we could see this tapering. Tapering has started. We could see it really go off. We could see the cost of debt to go up substantially, which means it'd be much harder to get money to grow a company. So having $3.3 billion on hand allows them to go out, purchase or acquire other companies, continue moving forward, innovating, growing their company, and doing what they need to do without really needing to dilute shares. That's where they got this money, was diluting shares. So that's already over. That's in the past. And now it's cash on hand. So they don't have to do that again. They have the money and they can just deploy it how they see fit to continue growing the company, even if debt and access to easy money gets really hard to get and it no longer is easy money. They still have this $3 billion on hand to buy companies, build out infrastructure, continue building their hydrogen plants, build out their brand and everything, and just do everything they need to do to continue growing. And that's just a massive thing right now to pay attention to. And then more on their earnings, kind of more on their future earnings expected. So you can see this goes all the way till to quarter 3 2022, but still expected to lose money, which is normal. That's what we should be expecting. Quarterly earnings, surprise amount, nothing big. But right here, yearly earnings forecast. This is why 2024 is such a massive date. We see, loss of 47, loss 23, loss of 4, and then a gain becoming profitable in December 2024. So the gain of 20 cents per share, earnings 20 cents per share. Even the lowest, though, is still a loss. But 2024, they're supposed to be generating revenue. Profitability is supposed to be there. They're supposed to be in a good spot. And that's what everyone's going to be looking for, is to make sure they can hit these numbers that they say they can hit right now. I think it's like $3 billion that they say they can hit in revenue in 2024, which will make them profitable. And they want like a 30% profit margin on that. And they've gone through details on how they're going to do that. And clearly, the market and investors believe them and think that they can do that because the stock went up after hearing that news. When the stock went down originally on the bad earnings, they lost more money than expected, but then they had greater revenue than expected. And they were talking about how they're going to generate this 3 billion, which was just last year 1 billion in 2024. So they 3x their expected earnings, their forecast there, as well as that explaining how they're going to do it. And investors in the market like that. We saw the stock go down and dive and then come right back up and rally once they heard that news and their forecast and how they're going to do it. And this just kind of breaks down the earnings report itself. Market expectations for Plug ran high ahead of its third quarter earnings. Their company did report its strongest quarter ever in revenue, which we said $143 million. Their strongest quarter in revenue, 34% up year over year. They posted losses, a widening to 19 cents per share, worse than what was expected. The company blamed the weak bottom line results on higher fuel, service, and product costs. So that does make sense. So you see these numbers and see that they were expected to lose 9 cents per share, but lost 19 cents. You see that and think that's really bad. But then they come on and say it's not because of the company itself or demand or anything going away. It's because supply chains are not in great situations right now. The cost of products, the cost of services are going up, and everyone's dealing with that. And being a growth company in this with not much cash flow, you're going to be suffering a lot more. You're going to be losing a lot more money to get this stuff done. So it is a bad time for Plug to, be in this position because of the inflation. But that's why I think cash on hand is so important for them to have right now. Also got a green hydrogen plant expected to start operating next year. And it sees its fuels business margin improving as well and breaking even by 2023. The fuel margin, the fuel industry for Plug and producing hydrogen itself to be able to supply it to people, I think is severely undervalued. They are going to be a monster in energy with their hydrogen fuel being able to do that. If hydrogen is supposed to take off, that's the big question is, does hydrogen take over the market or get substantial market share? That's what would need to happen for Plug to really take off. But I think it's not really being kind of priced in that them being a major supplier of hydrogen is going to be a big deal. And we saw market reacted initially negatively to Plug's earnings miss, and then it soon began more heavily factor the company's outlook and acquisition into the picture, which led traders to bid the stock higher. Like we said, a lot of people saw the initial numbers, said that's really bad. The stock price dropped, and then they listened to an earnings call, saw what they forecast for the future, why their numbers came in the way they were, and said, you know what, it's actually not that bad. And the stock was around $40 when the earnings report came out, and right now it's about 43. So the price did go up. People are bullish on the future of Plug and all of that good stuff. They raised their revenue guidance for next year from a range of 900 million to 925 million, which is crazy because just a year ago it was $1 billion was 2024 target. Now almost $1 billion is next year's target. So they're moving in the right direction. They've announced it's going to acquire frames, so they're acquiring more companies. Backlog of 100 million euros, and will support Plug's goal of reaching 3 gigawatts of electrolyzer capacity by 2025. Big words on their kind of supply of hydrogen. And then it was encouraging to see Plug Power reiterate its 2025 revenue projection of $3 billion. So even, I think 2024 is a little over $1 billion now. They started $1 billion last year. They were like $1.5 billion or something that they raised it to, and now saying $3 billion by 2025. So they just expect the business to really take off, really pick up, and kind of do what it's supposed to do and what the market believes that it can do. And you can see that they actually believe what they're saying, because even in the recent times, going all the way back to June 24th, there was 2 sells by insiders. This is insiders in the company buying or selling stocks. They have to disclose that and tell everyone when they're doing it. So we saw 2 sells compared to 8 buys in June. And then since then, no one has sold at all, but there's been 18 buys. And then most recently, in October, there was another buy from an insider. So no selling since June 2021. and then this huge run up, and they're still buying it. They're not selling. They believe in what the company is doing. They believe in what they're saying. The numbers they're putting out. Obviously, insiders have more access to information and how the company is doing internally than anyone on the outside. So seeing them really want to buy the stock, even at this price that was the bought was 41.65, around that area. So it's just great to see that they are doing it. They are buying their stock. They believe in the company. They believe what they're saying, and that puts a lot of validity behind what they are saying. And they're not just talking good to try and make shareholders happy. They are shareholders themselves and continuing to buy more when they know what the future could hold for Plug. So all in all, a pretty good earnings report from Plug. They missed their revenue or their like earning per share stuff where they wouldn't lose as much money, but they ended up losing more money than expected. But their revenue was amazing. It was the best or the most revenue they've had ever in the company, and it was up 34%. Then they had their growth projections looked really good, and their reasoning for why it was worse than what was expected for losses was a good reasoning. So looked good. Plug stock was around $40 when it came out. It's around $43 now. Market likes that. Add on top of that, insiders buying the stock, even and not selling it. No selling going on whatsoever right now. Would lead to believe they really believe what they're saying as well, which is a great sign. But that's going to do it for this video. As always, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.